Hello, everybody. Thank you for being here today. I have a couple of housekeeping items to go over before we get started. If you have a question, please fill up the Q&A. We're going to be using that. We will have 30 to 35 minutes at the end of the presentation for open Q&A, but we will be peppering some questions in between the presenters. Also, if you can't be here for the full 90 minutes, that's okay. We're going to be recording this, and to save time, we will be reading our guests' bios. I'm sorry, we won't be reading them. We will be putting them in the chat feature. So, having said all that, welcome everybody to today's Citizen Hero Conference. It is brought to you by Truth in Government. It was their brainchild that brought us all together. We are the co-hosts, Truth in Accounting. I am Judy. I will be your host for a topic that is central to our, government accountability and our nation's financial future in a nonpartisan way. So through our 5 Citizen Hero experts today, we will make the case that the federal government willfully withholds relevant financial information from its citizens through the accounting and financial reporting standards they create for themselves. You will hear today how these flawed standards have led to unsustainable debt and left the electorate uninformed when casting their votes. So while our citizen heroes may have slightly different perspectives and numbers to share, one common theme will emerge. The numbers are all big and the numbers are all bad, and they do not match the 36 trillion that the federal government is telling you about. So we hope that by bringing together these thought leaders that we will clarify the difference in the government's numbers. And we hope that we educate you on this vital but obscure topic. And we hope that you are inspired to sign our petition that we will be presenting to Congress and the Department of Government Efficiency. Having said all that, I would like to introduce our first panelist, the Honorable David Walker, who was the former Comptroller General of the United States.
All right, Judy, can you hear me?
I can, Mr. Walker.
So thank you very much. I appreciate the opportunity to be part of this forum. Let me give you about a 10-minute overview, and I know we've got a number of other speakers today, and we're going to have time for Q&A, I think, at the end. I apologize. We're going to be showing my slides. I'm having some problems with regard to Zoom this morning. So let's go to the first slide. I think it's important to understand that the states establish the federal government, not the other way around. And one of the things that I found is if you look at the preamble of the Constitution, which is shown with you here, and I've highlighted a few key words, you'll find that the federal government has strayed dramatically from what the founders intended, that it is doing many more things that were intended, and quite frankly, it's not doing many of them very well. In addition, states' rights have been undercut dramatically. Next, please. If you look, since 1912, the federal government has grown almost 10 times in size as it relates to a percentage of the economy, and it's still growing. Next, please. And the federal government has also lost control of the budget. So it's grown dramatically. It's lost control of the budget. In 1912, 97% of spending was determined by the Congress every year. The only thing that wasn't determined that was so-called mandatory spending was interest. Now, fast forward to 2023, which is the latest audited financial statements that are available, 73% of spending, we've written a blank check, it's on autopilot. The 27% that's controlled yearly includes every express and enumerated responsibility envisioned by the founding fathers in the Constitution of the United States. And the 27% is shrinking as we go forward. Next, please. The government has a lot of different numbers. The one that you hear about a lot is, the deficit number, the debt number, but there are even different debt numbers. There's debt held by the public. There's debt subject to the debt ceiling. There's total liability and unfunded obligations. This graphic shows you how dramatically things have changed in the last several decades, including since I left as Comptroller General of the United States in 2008. Things are totally out of control. People talk about the now 36 $1.2 trillion debt, which is on the debt clock, that's only the tip of the iceberg. When you end up adding total liabilities and unfunded obligations for things like social insurance, using a 75-year horizon, I can make the number worse if you want to use an infinity horizon, but 75 years is enough. And that's what's required by law for the Social Security Medicare trustees to use. The number is not 36 trillion, it's well over 125 trillion and growing faster than the economy. Next, please. If you look at the latest Social Security Medicare reports for 2024, you'll find out the Social Security Trust Fund is supposed to become exhausted on the retirement side in less than 9 years. And if that happens, there's a 21% across the board cut in benefits. If they end up deciding to loan money between the Disability Trust Fund and the Retirement Trust Fund, then they can get 2 more years out of it and only have to cut 20%. They've done that in the past. They could do it again. The whole point is it doesn't make any sense to wait. We ought to reform it sooner rather than later. And Medicare Part A has problems too. Its trust fund is scheduled to be exhausted in 2036 with an 11% across the board adjustment being needed in order to make the numbers work. Next, please. The bottom line, the federal government's grown dramatically. It's promised too much. It's subsidized too many. It's lost control of the budget. It's undercut states' rights. And it's got to restructure its finances in order to create a better future. I mean, current monetary and fiscal policy are unsustainable. We need better planning, transparency, accountability, results orientation. We need more citizen education and engagement. These elements are essential in order to achieve needed transformational change. And the failure to act will have severe adverse consequences for America and most Americans over time. Next, please. This shows you what I think is the most important metric with regard to the fiscal issue, and that is not total debt, not the annual deficit, not the debt clock, but debt to GDP. How much debt do you have as a percentage of the economy? We're near an all-time record. If you count debt held by the trust funds, we're at an all-time record, and it's not where we've been and where we are; it's where we're headed. It's third world nation status, and that's totally unacceptable and unsustainable. Next, please. If you look at the projections as a percentage of GDP, and let me just say, I reemphasize, I think the right metric is percentage of GDP, whether it's revenues, whether it's spending, whether it's debt, whether it's deficit. Look at things as a percentage of GDP, not in nominal dollar terms. That's very misleading. And if you look at it on that basis, you'll see we're spending in excess of the post-World War II average and headed up. We're taxing at about the post-World War II average and not going up much. But this assumes that all the tax cuts associated with the past Trump administration will expire. And I don't think that's a realistic assumption. It also assumes that we won't have any recessions, that we won't have any emergencies, and that we won't have any new federal spending programs, which I think is also unrealistic. So the bottom line is this is a very optimistic projection, not a realistic projection. Next, please. And then if you look at which components of expense are growing the fastest, you see the fastest growing expense is interest. And what do we get for interest? Nothing. Second fastest growing expense is healthcare. Social Security is a challenge, but frankly, a very manageable challenge. Healthcare is a much bigger challenge than Social Security. Next, please. And if you look at backdoor spending, by backdoor spending, what I mean is tax preferences, deductions, exemptions, credits, and exclusions. They're about 1.8 trillion a year, which is a lot more than Social Security and defense and Medicare. And yet they're like mandatory spending. They're on autopilot unless laws are changed to modify these. These need to be on the table as well. We need much more transparency with regard to tax preferences. Next, please. So what are the consequences of doing nothing? Slower economic growth, less individual opportunity, growing economic divide, less national security, lower international standing, less domestic tranquility, higher inflation and interest costs, loss of confidence in the dollar, and a potential global depression. I would respectfully suggest none of those are good, but that's where we're headed if we do nothing. Next, please. So what are some of the things that we need to do? Okay, we need to stop the bleeding. We need to cut spending for fiscal 2025 as compared to 2024. It's bloated. I give several examples. We need to streamline and transform government. I give several examples. DOGE can help in this regard, but at most it's going to give us a down payment. We need to stabilize the patient by creating a statutory fiscal sustainability commission that will actively engage the American people with the facts, the truth, the tough choices, and solicit input, and then set the table for a tough vote where everything is on the table, but not everything is equal. And by that, I mean mandatory spending, discretionary spending, and revenues. And then we need to cure the disease. The only thing that will bind current and future Congresses is a constitutional amendment. And I give several examples of things that are going on there. I'm involved in all of them. Next, please. So what are some financial challenges? When I was Comptroller General, there were several things that we did that were significant, I think. Number one, we had a statement of social insurance. Number two, we had a statement to show the long-range implications of doing nothing with regard to our fiscal situation. And number three, starting in, I think it was 2004, I included an emphasis paragraph in the audit report noting that the federal government was on an imprudent and unsustainable path, that it needed to make major fiscal reforms, and it should do it sooner rather than later. And here's some of the things that I think still need to be done with regard to financial reporting. We ought to have a double bottom line balance sheet that not just has the current number, but brings up all the unfunded obligations and has a second number so that you get to the you get to the much bigger number, which includes not just current liabilities, but also unfunded social insurance obligations to provide a fuller and fairer view. I think we need to show intergovernmental debt obligations as a liability. We took the people's money, we spent the people's money, we replaced it with a debt obligation that's guaranteed by the full faith and credit of the United States government and the 14th Amendment to the Constitution. We need to eliminate weapon systems and munitions from the balance sheet. We have no intention to sell them, but we need to increase disclosures with regard to weapon systems, and we need additional disclosures with regard to federal property. And let me add a new one, which I will add as soon as I get done off this call. We need many more disclosures with regard to tax expenditures. $1.8 trillion, wholly inadequate disclosures with regard to tax expenditures. Next, please. So in closing, we need to learn from the past and others. We need to prepare for the future. Our future is at risk. It'll bring challenges and opportunities for both the country, businesses, families, and all of us as individuals. The time for action is now at the national and individual level. I gave you a couple of websites to check out that can give you some more information. But the bottom line is we need more transparency. We need more accountability. We need more action and less rhetoric. I'm hearing a lot of rhetoric from Washington, but I'm seeing very little action and clearly not enough results. Thank you.
Thank you, Mr. Walker. We appreciate that so much. And we have also had some people in our chat ask if they could have a link to your presentation. So we'd like you to share that with us. So that
let me do this. Let me add what I said I was going to add. Then I'll send it back to you, Judy, and you feel free to share it.
Wonderful. Thank you so much. This is a good time to remind everybody that if the government can't count, then we can't count on the government. So our next guest is the economist, Dr. Kotlikoff. And he is going to be here talking about, I've got to start his video so you can see his wonderful face. He is here to talk about the fiscal gap and generational accounting. So Dr. Kotlikoff, welcome. Thank you. You have the floor now.
Thanks. It's a pleasure to be with you. I'm glad you're doing this. Yeah, we're on a fast track to Argentina. Hi, David. It's been a while. Great to see you again. Argentina spent a century going from a GDP of 85% of the US level per capita GDP of 85% of our living standard down to what is now 14%. President Milei is trying to turn that around with some draconian measures. And if they last long enough and they continue through time, he will turn it around, because the only thing that Argentina has had is bad economic policy, not bad resources, bad people, bad, in terms of bad, low productivity people, nothing like that. It's the it's the government policy that's driven the country down the tubes. And we see this in, look at Venezuela. That was it's an even starker example. We went from a decently a decent developing country to a starving country. So what's the situation? David's laid it out pretty clearly. I would say it's even maybe worse than he has described, because the official debt numbers that everybody is looking at are really a figment of our language. If we take, for example, this year I'm working at Boston University. I'm paying FICA taxes. The government's taking taxes for me and promising me higher benefits, even though I'm collecting benefits. I'm going to get even higher benefits as they recompute my Social Security benefits because of my extra earnings. That could be described as they're taking benefits. They're borrowing money from me, and they're going to pay me more in the future. They're going to pay back principal plus interest. So any borrowing and repayment of principal plus interest can be described as a tax and a transfer payment in the future. So the books we're looking at are completely arbitrary. There's not one time path or history or projection of government official debt. There's a million, a zillion, an infinite number, because all we have to do is choose our labels. So that entire enterprise is hopeless, and helpless. The thing that economics says in looking at this problem, which is that things are not well defined, just like in relativity in physics, because of relativity, time and distance are not well defined. We have the same problem. The mathematics of our economic models do not define what is a federal government deficit. It just doesn't. So what is well defined is the burden the fiscal gap. If you look at all the outlays into the infinite horizon and you discount them at the average return on U.S. national wealth, which is around 6.5%, and you subtract all the receipts the government is going to be getting in. So all the outlays minus all the receipts and present value, that's the fiscal gap. That's a big number. And a way to think about that number is it's 8% of GDP forever. Okay, so if you take 8% of GDP, projected GDP as projected by the CBO, and you discount it at 6.5%, you get to the size of the fiscal gap, which is a big number. And that's saying that in order to stabilize the burden on today's and tomorrow's children, we need to either raise taxes immediately, and the entire path of tax revenues have to be 8% of GDP higher, and that's about a 45% increase in every single federal tax rate, or we have to cut all federal outlays by 8% of GDP, which is a massive reduction. So our country is broke, beyond broke, and nobody seems to understand it because we're looking at the tree, the bush, the twigs, not the forest, and the forest is terrible. So I've been pushing for fiscal gap and generational accounting for years with other economists and writing books on this. And David certainly made efforts when he was running the GAO to improve the accounting and get closer to fiscal gap accounting. But interestingly, Senator Thune, who's now the majority leader in the Senate leader in the House, put forth a bill with Senator Kaine back in 2013. It's called the Inform Act. It's to do fiscal gap accounting. It mandates the government do that, and also to do generational accounting, which says, well, look, if we don't get anything more out of current adult generations, how much is the lifetime tax burden of younger people going to go up? The net of any benefits they receive. So that bill got 8 senators, 4 Republicans and 4 Democrats to sign on and went nowhere because nobody else would support it to do open accounting and economically sensible and meaningful accounting, whereas the rest of what we're doing accounting-wise has no meaning. Okay, so we're just completely driving blind. So what should we do at this point? I think we have to, the only way we can get to a new policy that achieves 8% of GDP in savings is to change the conversation. We have to think about major radical reforms. So, for example, with Social Security, which has, according to their trustees, a $63 trillion unfunded liability. Just look at Table 6F1 in the last trustees report. $63 trillion is the infinite horizon unfunded liability. The fiscal gap in Social Security just by itself, that's twice the official debt, the gross debt. So how do you fix Social Security? Well, you can putter around and kind of operate on half the cancer, and the patient comes back 30 years later and it's 4 times, twice as big, which is kind of the situation relative to the Greenspan Commission. So what's better to do would be to grandfather the old system, do not let anybody accrue any benefits under the old system, any more benefits, fill zeros in the earnings records, set up a new fully funded personal security account system where everybody contributes 10% of their pay. It's divided 50-50 between spouses. The government makes matching contributions on behalf of the poor, the disabled, the unemployed. Everything's invested the same way by my laptop in a global fund of index fund of stocks, bonds, and real estate investment trusts. And then you guarantee a 0 cumulative return on this fund when each cohort's money, when they reach 57, would be gradually transformed and sold off. Their holdings would be sold off and used to buy inflation index bonds, and those bonds would then be used to pay back the contributors in the form of inflation indexed annuities. That's a modern version of what Bismarck would have established for Social Security if he were to arrive here today and we had no Social Security system. That will get everybody, the Republicans and Democrats, off of a fight because they're fighting about something they're aware of and start thinking about something they're not thinking about. That's an example of changing the conversation so we can actually move forward. Tax reform is another place. Medicare for all, that's what the Democrats are saying we need. Well, let's go to the Republican version of Medicare for all, which is the Part C version, the Advantage plan. But let's do it with a better regulation requiring all these competing HMOs to operate all over the country and not cherry pick what areas they operate. Now we have competitive healthcare. We can get that 19% of GDP we're spending down to 11%. I'll say this last thing. Sweden spends 11% of GDP on healthcare. We spend 19%. They have 4th best outcomes. We have 21st best outcomes when you rank outcomes by country. So there are things to do, but it requires thinking dramatically out of the box. I hope I didn't go too long.
No, you did perfect. Thank you so much, Dr. Kotlikoff. And I want to say it's really fun to say your last name. So that's been a joy.
Fun for me
Stay
too.
tuned. Stay tuned. We have we have questions coming in. Our third Citizen Hero panelist is Sheila Weinberg, CEO and founder of Truth in Accounting. And Sheila, please let us know what your research has turned up.
Thank you so much, Judy. We go based upon one of the core principles of the country, which is Thomas Jefferson, who once said that something like an informed electorate is the basis of a sound representative form of government. So I would ask the audience, what type of government do you get if the electorate is misinformed? And I would say that you get one that is more than $150 trillion in debt, $1 million almost per taxpayer. Another principle that its accountants go based upon is that if you don't measure it, you can't manage it. Yet we have two of the three largest programs, Social Security and Medicare, are in essence kept off the federal balance sheet. There's just a minuscule amount kept put on there. These programs, as David mentioned, are off budget, on autopilot. And obviously the spending are unmanageable. So it goes to show that if you don't measure it, you can't manage it. The third major program is the Defense Department. While its assets and liabilities are on the federal balance sheet, there's no certainty around the accuracy of those amounts. The Defense Department's books are in disarray, and they're so bad that the auditors, they don't just flunk their audit. The auditors can't even audit their numbers, as David well knows better than I do. To give the public a better understanding of the government's debt, we produce our annual financial state of the states, and we have our spinning debt clock, which shows what the reported public debt is, which is $36.2 trillion, and our estimate of $158.5 trillion. This includes, as David mentions, more than $50 trillion of unfunded Social Security benefits and more than $66 trillion of unfunded Medicare benefits. Now, I say unfunded, and what I mean by unfunded is the Congress and the presidents have promised people benefits, and they have no idea where they're going to get the funds to pay for those benefits. We estimate our true national debt by taking the numbers in the Treasury's financial report and the assets and the liabilities, and then we add the unfunded Social Security and Medicare benefits that the trustees calculate over the 75 years, receipts over the expenditures over receipts. How much benefits are we going to pay, and what's the receipt? So again, they have a lot of benefits that they've promised, but they have very few, they don't have the resources to pay them. In our estimates, we do not include people who are not in the program yet, who are not even working yet, who are not born yet. That's called the closed group. We believe that the accrued benefits or Social Security and Medicare should be recorded as a liability on the federal federal balance sheet of the federal government. As an accountant, the liability as accountants record a liability if something is estimatable and if it's probable. Well, the Social Security trustees calculate the unfunded amount, so it is obviously estimatable, and it is, I would contend, probable. Most Americans at least think it's probable that it's going to be paid. At one point in time, there have been two times where the Federal Accounting Standards Advisory Board has debated on whether Social Security and Medicare should be a liability on the balance sheet. I was at one of their hearings, and I nearly fell off my chair when I heard the chief actuary of Social Security make this statement. He said, an overriding uncertainty exists under Social Security and all federal social insurance programs, including Medicare. This is the government's right and ability to alter potential future benefits. Until benefits are due and payable, there is no binding commitment over which a worker has control, and so no liability can be recognized. So what he said, in essence, is he said that the federal government owes nobody any Social Security or Medicare benefits beyond the checks that are currently due to be written next month. Now, I argued when I testified, I said, well, okay, don't record them as a liability if you believe that. But I think you need a massive education campaign to the American public to tell them that they are not promised these benefits, and quit sending them those statements that say that they are owed those benefits. Another shocking statement he said is that benefits are not directly related to or committed upon the receipt of earnings or the payment of taxes. So remember, boys and girls, the amount that's being taken out of your paychecks for Social Security and Medicare, what he's saying is those aren't necessarily for Social Security and Medicare. You have no guaranteed benefit. It's not related to that. So So another recent troubling event over this issue is the expansion. We just expanded Social Security and Medicare benefits for the first time. President Biden, when he signed the bill, said that we're extending Social Security and Medicare benefits for millions of teachers and nurses and other public employees, as well as their spouses and survivors. While I'm not judging whether these beneficiaries should get the benefits, the question is how much unfunded Social Security benefits did that add? And I believe nobody knows. Before they passed that bill, I don't think Congress said, hey, could you tell us how much more unfunded benefits we're going to have? So the other question is, shouldn't lawmakers, before they make such a large decision, be required to at least know that number and communicate it to the public? And the other question is, we already have at least $50 trillion of Social Security benefits that we have no idea where we're going to get the money for. Is it really a fair act if you're promising even more benefits where they have no idea where they're going to get the money for? This is an example of the ongoing problem that the Federal Accounting Standards Board failure to require governments to properly measure this debt is. It also illustrates how Congress keeps on making decisions without having access to critical information needed to make responsible choices. And without those proper measurements, decisions are continually being made without understanding the true cost of government. And I have a chart from our Data Z website, and it shows that this is what happens if you don't have the information you need about, and this spending is uncontrollable. In 2008, the unfunded liability was $59.2 trillion, and it's grown all the way up to $154 trillion. So we have this on our Data Z website. You can use that to create charts about the federal government's information, our information, economic and demographic information. If you go based upon, and if the federal government isn't handling Social Security as a liability, then here is what's happening. I think the easiest way to say it is, let's pretend that I do what Joe did and I run for office. And my campaign is, I'm going to start a new program. And the new program is going to take money out of young working people, say they're making a couple making $60,000 a year. We're going to take 7% of their salaries. We're going to make their employer match that. So 14% of what they could possibly make. And we're going to pass that on. We're going to do a wealth transfer to people who have higher standards of living than they do. And I think I would not be elected. I would be laughed out of the campaign. But that is exactly how Social Security and Medicare work. No matter how we measure it, that's how it works. And that we talk about generational equity, but that's the bad generational equity that is going on now. And I think one issue we have with this group is we have to figure out a way to educate this to the public in a way that they would understand. And I do not know if the 159 or our debt clock is the right way. GDP, I don't think the average American understands GDP, much less a percentage of GDP. So I think we really need to work on making that. And I'm anxious to work with everybody on the call, on the Zoom, and everybody in the audience to educate the public about this and our elected officials. Thank you, Judy.
Thank you so much, Sheila. Those are some scary numbers, but very enlightening. Congressman Joe DioGuardi is the founder and CEO of Truth in Government, and he is here as our next citizen speaker to give us his opinion on things that have happened.
Well, as you know, I've been working on this for many years, among other things, but we have a system which is out of control. I remember when I did the first book on Unaccountable Congress Doesn't Add Up, I put a credit card on the cover and it said, current line, that's the debt limit, unlimited, expiration date, never, and bill to future generations. So we have a big problem with generational accounting because one generation is really taking from another. And someone came to visit me about 8 years ago, and I can't seem to find him now, but he was not an accountant, but someone who was interested in math and statistics. And after we spent many times together, he decided he wanted to do a book. Now, I can't find this book was never published, but he entitled it, if you can see it, U.S. Ponzi. So in other words, he got from reading my book that everything right now in the federal government is a Ponzi scheme with the next generation, which is kind of the way it should be discussed because we've got a situation where we're spending money we don't have and borrowing in effect from the next generation because it's got to be paid back. Now, who's going to pay it back if we can't control spending? It's and the biggest problem is that we've given the whole issue of accounting up to politicians, and they don't want to count. They want to spend because they want to get reelected. And that's the issue now. So we're at the point now where even the interest on the national debt, which is a mandatory payment, is now probably passing at this point, I would say one of the biggest problems, biggest expenditures we have, and that's defense. Because defense is considered it's not a mandatory payment, but interest is, and so is Medicaid, Medicare, and Social Security. So we have to really go back and understand how we got here. Now, I did make a presentation, and we're supposed to see it, 3 minutes in front of the Reagan National Defense Fund. It was at the Reagan Library back in 2014. A good friend of mine was Senator John McCain, and he allowed me to be a consultant to him and the Armed Services Committee on how they spend money. But they could never come to a solution because everybody wants to spend money we don't have. So I think you're going to see that and how I confronted. I felt the only way I could do anything besides what I've done already, run for office so I can have a voice that could be heard. And then two, figure out how I can write articles. And first I started off with that book, Unaccountable Congress, the many articles that showed that we're nowhere near having accountability without having auditors come in using generally accepted accounting principles so we know what the real numbers are. We don't know what the real numbers are anymore. So I figured, let me go down to the Reagan Library because they had a seminar, or at least a big discussion with 600 lobbyists, all lobbyists at the Defense Department, on what needs to be done because they're very concerned that we're running out of money for more weapon systems. So I would not be invited to that. I tried. So I got John McCain to kind of open up a door for me, but I literally had to go to this meeting without having been registered. It cost me $5,000 from Truth in Government because that was the requirement. You couldn't be there without spending $5,000. So I went there and I stood right next to the mic because I realized based on what was going on, no one's going to ask me to speak. So when it got to that point, I just grabbed the mic, introduced myself, and started speaking. And that's the video you're going to see after I finish. Okay? So I got a lot of people upset, but a lot of people said, Joe, that's what you got to do more of. We got to find a way to stop the spending. And we got to embarrass, especially politicians who are all claiming that they're using the money for valid purposes in their districts, but really a lot of it is geared to getting them reelected, spending money. And now we got a new president coming and saying that at a minimum, he wants to spend $2 trillion on additional interest deductions. How do you do that? We don't have that money. So I'm going to be interested now in seeing how tough the Senate is going to be with respect to the people who are now being appointed. What questions are they going to get? I want to see how they think the money is going to come in to the system. So with that, I'm going to just leave it. And Fatan, how do you play the video?
Joe, can you play that video for us now?
Yeah, we'll get it.
Yeah, Faton's gonna play it.
Oh,
How do I share it? I can play it. I just don't know how to share it. Oh, never mind. I think I do. Sorry. Technology here.
I tell you what, why don't we go to Andy and then we'll play it at the end as you
Yeah.
suggest. I'm happy to share it.
Thank you very much. I'm former Congressman Joe DioGuardi.
Yeah, let's do that.
we ready?
Keep playing it.
Hello.
We're gonna listen to Andy and then we're gonna play Joe's video. I'm getting it ready right now.
Okay.
Great.
And
All right.
you are, Andy, come
Yeah,
right.
I'm here.
Is
Can you
your
unmute?
turn. We've
Yeah,
got,
there you are. Now,
yeah,
do I need to share my screen?
if you have a presentation, you
I
can
do.
share your screen.
All right, hold on one second. You got to let me do it. Okay.
Joe, you should probably turn off your video now. Yep, thanks.
Okay, this is the one I want to share. Okay, can everybody see that okay?
Yep.
Okay,
Yep.
I got roped into this. Thank you, Joe Carvin. He and I serve on a board together, and we were talking about this issue. And Joe asked me to participate because I am a CPA. I'm retired. And by the way, just to open up my comments are mine, are not the comments of the firm I used to work for. So these are all my opinion. I'm going to echo what everybody said here. I think the comments, and by the way, I'm honored to be here because the folks who have spoken really are sharp, and I'm honored to be on a panel with them. But my comments are going to be focused primarily around the accounting because I think what Joe DioGuardi has said, we've got to first get ourselves on accrual basis accounting. Okay, I think Sheila said it. You know, you can't if you can't count the numbers don't count. And I think we've got a real issue here with our government just around the accounting. And then once we get that done, we can start dealing and actually doing some action. Let's first of all, let's take a look at what isn't being reported by the federal government. And if you've been listening, you really do know what's going on here. The federal government is not reporting on an accrual basis. The combined financial statements, and I'll come back to that in a minute, are not in accordance with generally accepted accounting principles. Period. End of story. And as we've said, the major liabilities that are not calculated and reported, I should say they are calculated, but they're not reported. Social Security, Medicare, certain military and other benefit obligations. Those are the big ones. And as we've alluded to, they're trillions. These obligations by the federal government are essentially defined benefit pension plans and other post-employment benefit liabilities for literally every citizen in the United States. So you got, 300 million people, plus the promise for future generations. So, of course, you'd expect big numbers, and they are big numbers. And one of the comments that we've had leading up to this is people are scared of these numbers, and they should be. Okay, it's a major, as everybody has said here, transfer of wealth from our younger generation to the seniors, and something that needs to be done about it. Now, what do we mean by a defined benefit pension plan? I think some of the comments earlier pointed out that there's a formula based upon your earnings and the taxes that you pay in that creates the obligation. As Sheila said, there is an obligation by the federal government to pay, despite what that guy was saying. There is one. So that's a defined benefit pension plan. What does GAAP say about that? What are the reporting rules for everyone else? Okay, what is generally accepted accounting principles? And by the way, every publicly traded company follows these rules. Otherwise, they couldn't list their shares on the stock market. Generally accepted accounting principles broadly are accrual accounting. And as Sheila pointed out, that means, hey, when we have revenues, it's what we have earned. And when we have expenses, it's what's probable that's going to be paid. So we would accrue the obligations. The Financial Accounting Standards Board and the Governmental Accounting Standards Boards have detailed rules in the accounting standards codification. And if you're interested, being a nerd accountant like me, it's section 715 of the Accounting Standards Codification. I encourage you to Google it and go take a look. couple of the big numbers or the big concepts that are embedded in that are what we call the projected benefit obligation. And that's what Sheila's talking about. This is what we're projecting will be owed by the federal government on a discounted present value basis. And they calculate this number. We know what it is. And then, of course, other post-retirement benefit obligations are determined in the same manner. So these are the reporting rules everybody else has. So what is being reported by the federal government? Okay, the combined financial statements, receipts, outlays, and balance of the United States government. That's reported every year. The government's on a fiscal year, September 30th basis. There are reports issued by the Social Security and Medicare trustees. And as you can see here, I highlighted it. The 2023 report was issued last May, 277 pages. The health insurance or the Medicare trustees report, 266 pages. But the bottom line in all this, and this is eloquently reported in these reports, the Social Security trust assets are going to be fully depleted by 2033. So in other words, the assets that they have, which by the way, are just US Treasury obligations, okay, which, you know, is a debt to ourselves, okay, those are going to be gone by 2023. And so the only funding they'll have is what current receipts are being paid in, or what current taxes are being paid in. And the Medicare trust assets will be fully paid by 2039. I heard somebody else say maybe 2036, but be that as it may, they are in a very short time, they're going to be fully depleted. Okay. But what happens when these assets, when the reserve assets are fully depleted, they continue to pay benefits, but they're limited to whatever tax receipts. So they project how the benefits will be scaled down. But I think the most important thing here is neither report includes a balance sheet, statement of operations on a full accrual basis in accordance with generally accepted accounting principles. They don't report the projected benefit obligations in the balance sheet, which would then be included in the combined statement of financial operations. So just to sort of summarize my point here as a simpleton accountant looking at this from outside, the bottom line is the federal government system of accounting is just wholly inadequate, okay? The annual budget deficit bears no resemblance to how much the Treasury will need to borrow to pay all the obligations of the federal government. The budget should be on an accrual basis, and that means to the extent we incur additional obligations for future benefits, that should be reflected in the budget on an accrual basis. Now, we are going to identify the assumptions. The assumptions are well documented in these reports. And as I say here, they could be the basis for making changes. I like what Dr. Kotlikoff suggested. Perhaps we go to what is essentially a defined contribution plan. Okay? That's one option. But the point is, let's get the numbers on the books. Let's get people to see it. And you can see here in my sub-bullet point, reporting the total obligations may provide some political cover for Congress. Right now, it's all buried in these Social Security and Medicare trustee reports. Let's get it out there in the public. Let's make people uncomfortable. Report this so people can see it, so that the congressman can step up and say, you know what, we got to deal with this. It's unfair to the future generations. We need to deal with it. And as I say here, there's no doubt the data is available. It's all there. All the actuarial work is done. So let's just get on with it. Put it in the financial statements. Now I have my last comment, and that is, where do we go from here? And Joe Carvin and Joe DioGuardi and other folks, I think the next step is getting a group and getting together and getting our voices heard in Congress. And that's going to be a petition, getting folks focused, writing your congressman, and getting this done. So those are my comments. I'd be interested in answering any questions. Thank you.
Thank you so much, Mr. Miller. We appreciate that. Joe, are you reading the Q&As that are coming in?
I am, but I'm also seeing that David Walker would like to make several comments. So let's go over to David at this point.
Wonderful.
Thank you very much. Yeah, I want to try to clarify clarify several things before we get into Q&A. Number one, current financial reporting for the federal government is in accordance with GAAP, but it's not FASB or GASB. It's the Federal Accounting Standards Advisory Board. And I believe, and obviously several people on this call believe, that those reporting requirements should be revised. But the current requirements are considered to be GAAP by the AICPA. So there's just a different standard setter. Secondly, as I said before, I think we need to separate between liabilities and obligations. And we can end up getting in a debate about the legal issues or whatever else. But the bottom line is we need more transparency with regard to social insurance obligations. That's why I talk about a double bottom line on the balance sheet. One that has liabilities, which liabilities should include the debt, the intergovernmental debt, which is about $7 trillion. Okay. But that would be the first bottom line. The second bottom line would pull up all the unfunded obligations for Social Security and Medicare and create a second bottom line. The second issue was should we base the numbers on 75 years versus perpetuity? I believe 75 years because that's what the law requires, although I do believe that there ought to be supplemental disclosures for perpetuity. Frankly, the numbers are bad enough with 75 years. It's almost overkill to talk about perpetuity. With regard to the Social Security Fairness Act, I mean, it was fiscally irresponsible. It was inequitable. And I don't know the exact number that it added in cost, but I do know that it's estimated to accelerate the exhaustion date of Social Security by 6 months. And the last thing is when you talk about Social Security and Medicare, you need to think about several different dimensions. Okay, one, what's guaranteed by the Constitution? All right, the only thing that's guaranteed by the Constitution is the debt. Nothing else is. Number two, what's guaranteed by law? What's guaranteed by law is benefits up to the amount of assets in the trust fund. So by definition, if the trust fund assets run out, which we've talked about those dates before, you have automatic cuts in benefits. Automatic cuts in benefits. In the case of Social Security, it's 21%. So the bottom line is that there need to be improvements. But I think it's important for people to understand that there are generally accepted accounting principles. They just need to be revised. And by the way, the U.S. government is audited. It's audited by the Government Accountability Office, but it hasn't been able to express an opinion because of the Defense Department, which is the only major department and agency that's not been able to withstand an audit. And quite frankly, I think they're several years away from being able to get there. But just wanted to kind of set the record straight on a few of those things before we got into Q&A. Thank you for giving me the opportunity to do that.
Thank you so much. Judy, can I maybe like respond?
Sure.
So, and basically what I'd like to do is really hear from all the panelists. And David, well, look, first of all the citizen heroes, and I don't use that term lightly. I teach a citizenship class. I don't know if you can let me get my video on or not, Judy, but in any case, I teach a citizenship class, and I really can't thank each of our citizen heroes for all the work you've done for several decades now. And again, I think we're all pushing in the same direction. And I appreciate your clarification, David. I guess so for the layman like myself, right, who's a Wall Street person, and I'm thrilled, Andy, thanks so much for coming in and bringing your accounting hat to bear. But I love your idea of a double bottom line or even a triple bottom line. In other words, for me, what infuriates me is we talk about 36 trillion. And I understand the difference between debt and obligations. I hear what you're saying, correct. So I love your idea of a double or even a triple bottom line. So bottom line debt, right? And yes, President Trump could announce tomorrow, not a single additional payment is going to be paid tomorrow for Medicare and Medicaid, Medicaid or Social Security. So you could argue that's not a debt, but it's certainly an obligation or perceived obligation by the general public. And so ultimately, I love your idea of a double or even a triple bottom line because I'm interested to hear from everybody else. The speakers here, Dr. Kotlikoff talks about intergenerational. I think he's closer to the $200 trillion number. but because he uses the infinite time horizon. So, debt, you have two numbers for debt, 26, 27, and 36. You have the uninsured social insurance obligations, which take us somewhere between 125 and 200 trillion. And that's your second bottom line. And the third bottom line for the infinite, and a fourth bottom line for the future participants, which gets you to 175 before the 36. So I love what you're talking about. I think the fundamental challenge that we're all talking about here is the lack of disclosure. And as a good citizen, how does, I mean, I was looking at the work that Joe DioGuardi did, in introducing the CFO Act on the back of the two Hoover commissions and the 1956 law that apparently the law tells us we need accrual accounting. So I guess I want to hear from everybody again, and then David, I want to turn it back to you, but I think we're all moving the same direction. I think what we're all saying is the information as presented is insufficient at a minimum. You accountants can argue whether it's GAAP or not GAAP. There may be a difference of opinion here, but at the end of the day, the information is not real. Anybody that publishes a $36 trillion number today infuriates me, because it seems to me they're not being honest and fair in terms of the obligations, as you pointed out, David. But let me open it up, if I could. Judy, I don't know, Sheila, did you want to say something? Or somebody else?
I think
or Larry, Dr. Kotlikoff?
I do.
Yeah, let Dr. Kotlikoff. Yeah.
Judy, do we lose Judy? How do we?
No, I'm right
I
here.
don't know if people can put up their hand, or
Can I say?
Judy, how do you bring other people into the conversation?
Yeah, Andy had his hand up. So if our panelists want to turn your cameras on, and then when you want to speak, you can just raise your hand and then unmute yourself, so you have control over your camera and your microphone.
Judy, I just want to make sure, because we do have audience members, so it can be your judgment on whether we should all, when and how much time I think we owe it to them to give them a voice also.
Absolutely. Yep. I am concerned. We did say we were going to play the video for.
I think we can do that right now before we
please.
take the round of questions, and then move on.
I
can
see
do
this.
that right now.
Please.
All right.
Okay, let me share. I think I figured how to do that. Okay. Share.
You're getting there. We see it
I'm
starting. There we go.
DioGuardi, Westchester County, New York, in the 80s, the first certified public accountant practicing CPA ever elected to Congress. I originally introduced the CFO Act in 1986, twice more in 1987. It was passed in 1990. You've got two major problems. Let me talk about briefly the numbers: the budget problem and a public relations problem. What's the budget problem? The budget this year, round numbers, $3.8 trillion. 65% of it, including the interest we pay out, is mandatory, including obviously a program like Medicaid. So 35% is discretionary. Right. Half that budget is the defense. So you got a problem to compete against the others in that 35%. Education, you name it, all kinds of important things. To do that, you got to make a good case. How do you make a good case? I'll get to the public relations problem, accountability. When the DOD, the requirement for financial statements, the act that I introduced, started in 1994. The Comptroller General, in his report, the last statement put out, says that the armed services, the DOD, will not be able to comply and get an opinion because there are such material weaknesses in the way you account for things, and you want more money.
So is there a question?
The question is, why is it taking so long? I mean, it's not rocket science accounting. You got to get the right people in there to try to figure out why you can't get an audit of the DOD.
Secretary James and Dr. Zackheim.
I'm going to, rather than try to explain why, I'm going to agree with you. It has taken too long. And I mentioned briefly that this is something we're working hard on in the Air Force. We're working hard across the Department of Defense, including Frank, Bob Work above him. I think stay tuned. Very shortly, like within the next year, you're going to see that we're going to have major advances. We're going to get there.
I had to grapple with that when I was comptroller. My successor had to grapple with that. Bob Hale, who's here, had to grapple with that. It's not that people are deliberately trying to not get good audits, obviously. But one thing, and you know this very well, for instance, we talked about facilities. Arnold rightly said there are an awful lot of facilities we've got to get rid of. Some of these are quite old. How do you value them? How do you come up with the right numbers? I mean, sure, you could come up with numbers, but if you want a clean audit, you can't just throw numbers out there. You're not even going to get a qualified audit. And, we're talking about a huge enterprise, $600 billion, give or take. Nothing like that anywhere else. Never had audits before until you actually push this act. And it's just taking time. And I think with the best of will and the best efforts from guys like me and Bob Hale and our successors, you can't hammer the services enough. That's number one. Then there's a cultural factor. And that is simply the fact that somebody in uniform in particular sees his or her job as going out and fighting for their country and not working the back office problem. So guys like me are back office guys.
That I'm having some difficulty in my video.
I think instead of looking at the glass as being half empty, think of it as being half full, that people like Secretary James have been able to push people, even as they're fighting in Iraq and Afghanistan, to worry about clean audits.
General Pinero, and then we'll take a question over here.
They are making progress, but one of the things they're not making progress on, and one of the reasons is they do not know and they do not track the fully burdened and life cycle costs of their personnel. Active duty, Guard and Reserve, or defense civilians. Unlike industry, Maryland, West, others, they have to track their long-term pension costs. They can't just take those off the books. As I said, DOD's got $1 trillion liability for future costs for retiree health care and pensions that aren't on the books, and they're not even on the books right now. So they've got to come to grips with the fully burdened and life cycle cost of their people. They've got to start figuring out what they are, and they've got to account for them and track them every year.
Answers, by the way, is a capital budget. You don't have a capital budget, you throw all your expenditures into the deficit, and people don't understand the difference between what you need now and what you need later. 37 states have a capital budget. The United States of America doesn't, and I dare say the Department of Defense doesn't have one either.
Thank you. Let's hear from this gentleman over here.
Can you hear me?
Yes.
Okay, thank you. It was more than 3 minutes that I thought, but anyways, I think it's right on the point.
Yep.
In the sense that, oops, did I stop sharing?
Well, thank you, President Powers,
Okay, sorry.
Provost.
That's all right. We love technical difficulty. Go ahead, Fatan.
Judy, I see a whole bunch of people with their hands up.
Yeah. Can I just interject
I'm
here?
sorry, I had to turn off something that went on crazy in the background. But anyways, one point, remember they're saying they're going to get it done next year? Well, we're 10 years after that next year, and nothing happened, and nothing will happen because, as everybody said, unless you can count properly, numbers are not going to tell us anything. And then they don't have the number, as we all discussed. We don't have the number, but we have some good estimates. And I think that's an important thing to note, that it's great. And Joe DioGuardi took this to the Capitol Hill when he first ran for Congress and succeeded in trying to get that bill done. The question I always have in my mind, why in the world would that never be implemented? But anyways, let's go to the round of
Judy, can we go ahead and because I know all of us want to speak. So one, if you can make the management decision on whether you want to do audience questions, and then number two, I think go around in the order that people.
Sheila, I apologize. I want to hear from you guys. We'll go to the audience
I'm
second.
saying, okay.
We'll
so
go to the audience question
go
second.
around based
I really
on,
want to hear from you guys. Yep.
Yeah,
Judy,
I'm going
you
to
could
call
go around based on who presented and what, David would go first, and then Dr. Kotlikoff, and then me, then Andy.
Yeah, I am going to call on Dr. Kotlikoff next because he's had his hand up for the longest time. So Dr. Kotlikoff?
Sure. Yeah, I can't put on my video for some reason, but let me just say, so economics says that we need to do this fiscal gap accounting. It's not the same as accrual accounting, just to be clear, you're looking at what the government's promised into the future. So if you think about Social Security, if you take a 30-year-old, they've accrued some benefits up to now. They're much smaller than they're going to accrue when they're done their, by the time they retire. So in order to really understand what is in front of us, we have to look at projected benefits, not accrued benefits. And so this idea of accrual accounting, it's popular among accountants, but it's not what economics recommends. These are fundamental economic problems, fiscal. I'm a fiscal expert. That's what I specialize in, fiscal economics and public economics. And we have a very clear way to do it. And it's fiscal gap accounting, and it's in this bill. If we can get Senator Thune to reintroduce it, since he's now the majority leader, let's push on that. And then we'll have the right kinds of accounting. And it might actually be easier for the Defense Department to participate in that. I mean, the CBO has projections that are enough to make fiscal gap accounting. And I do these projections every year. I think I'm one of the few people who does in the world. And the CBO's numbers on defense are included there. So we don't have to be stymied by the Defense Department. We can put these numbers out. The key thing is making them public so that everybody sees them, that we need 8% of GDP forever. That's the basic bottom line. And that means like a 45% immediate and permanent tax increase, unless you want to cut some spending or reorganize, like I'm talking about. Think out of the box. Anyway, thank you.
Thank you for that. Andy, you've had your hand up for a while too.
Yeah,
So
I just have a couple comments. Yeah, Dr. Kotlikoff, that's the projected benefit obligation under ASC 715 that you're talking about. So, what future benefits they might accrue would be, i.e. that 30-year-old, as they go through their life, what they're projected to earn and what that future obligation would be discounted back and included. That's the projected benefit obligation that's in ASC 715, and that's what they should record.
Okay, we agree.
Yeah, 100%. I'm way behind. I'm 100% with you. A couple things I think we need to do. I'm not sure everybody on this call understands what the FASAB is. Financial Accounting Standards Advisory Board. Thank you, Joe DioGuardi, because he started this back in 1990. And the whole idea of the FASAB, the Financial Accounting Standards Advisory Board, was to get their arms around what is GAAP for the federal government. And there are it's a 9-member board. Right now there are 8, and I'm voting for Sheila to be the 9th. I hope you can get on there, Sheila. Okay. And they have chosen not to record these obligations. Okay. And if you look at the board, these are smart people. Okay. They really know what they're doing. Okay. But understand, they're the ones, as David Walker said, they're the ones that set GAAP, and AICPA says, hey, for the federal government, that's the law. Okay. We're going to follow that. My view is the FASAB should set GAAP like every SEC registrant has to follow. And they should be recording it the same way. And again, if you don't account for the numbers don't count. And they're not accounting for the numbers properly. And all the stuff that you're suggesting, Dr. Kotlikoff, I agree with you 100%. We have a massive generational wealth transfer here. What's going to happen in 2033? Okay, when the reserves go out, guess what? That's a direct transfer. Okay, younger people are paying to the old guys. Okay, and that's what's happening. And it's not fair. I have 6 grandchildren. I've got 3 kids. It's not right. Okay. It's just wrong. And I think you're right on target with what you're saying. But again, I think the first step is getting this stuff on the books. And the reason I say that is 90% of the Americans don't know what these numbers say. They have no idea. Okay. And we have to get this out into the public. People have to see it, understand it. Don't be scared of it, but understand that it's there and it has to be dealt with. That's my comment.
Thank you. Thank you for that. I always want to call you Dr. Walker. I'm so sorry. I'm making you a doctor today.
Just call me Dave. Just call me Dave.
It is your turn. Give us your thoughts.
Several quick points. One, unfunded military and civilian pension and retiree healthcare liabilities are on the balance sheet already. There's several $1 trillion. Secondly, while I think it's going to be a number of years before the Defense Department as a whole is going to be able to get an opinion on its financial statements, the Marine Corps got an unmodified opinion on its financial statements for the year ending September 30, 2024. So that's at least some progress. Thirdly, I think we can all agree that we need better financial reporting and clearly additional disclosures above and beyond what we have right now. But I'm here to tell you that there are powerful forces that would be adamantly against Congress trying to legislate accounting standards. Congress can't even pass a budget. The last thing we need is for Congress to determine what accounting standards should be. It's one thing to be able to, encourage changes. It's one thing to maybe require disclosures, but to determine what's a liability, what's an obligation, et cetera. My personal view is, Congress needs to do its constitutional job, and they don't do that very well.
Well, with that happy note, we do have a question from the audience.
Actually, hold on. Judy, you're missing
Okay.
your good friend Sheila.
Yeah,
Sheila
right.
hasn't had a chance to respond. Hold on 1 second. Sorry.
Judy works for me. She ignores me all the time.
Well, the thing is, the question was going to be geared to you, Sheila, so I'll wait and I'll give it to you in a minute.
Go ahead and give me the question. I'll add it to my comments.
Okay, so the annual report of the federal government based on the FASAB standards, everything, the numbers are there. There's the separate schedules for the Social Security, Medicare are there. So this person is saying that all of the information is there. It might not be in one report. It might be spread out. But the question is, what evidence do we have that different accounting standards would have an impact on the decisions that Congress makes? And I think that's a valid question, because we are saying the voters are uninformed. Would Congress change their behavior if all of their information was readily available and understood by the electorate?
I would use the example of New Zealand. So New Zealand does do full accrual accounting for their financial reports, and Andy, for their budgets. They also do it for their budgets. So when, and they issue that almost like a corporation. I know it's a crazy idea, almost like a corporation. And they issue them on a very regular basis. And so they have a bottom line. Let's say that the bottom number is, I'll use my number because I'm selfish. Let's say it's, right now $158 trillion. Well, when Congress when they went ahead and passed this unfunded liability, with this new Fairness Act, quote unquote, they would have had to calculate that number. And then within 2 or 3 months, the public would know how much unfunded liability they had just added, or how much debt they've added to the public. And I've talked to people in New Zealand, and the politicians pay attention to that, and the public pays attention to that. So I think that is one. It leads me to one other thing, is that I think the bottom line we have to figure out is, how do we make this concept, whatever measurement we want to use, appealing to elected officials? And that, I think also we have to make it appealing to the public. And if, obviously $36.2 trillion is not the correct number. So I do like the idea of promoting, I think the people, because again, it's hard, the GDP is going to be hard to explain. Accrual accounting is going to be hard to explain. But I think Dr. Kotlikoff's concept of, we are going to have to raise taxes by X amount, or we're going to have to cut services by Y amount in order to solve this problem, that is also a good way to look at it. I would love to see congressional hearings on the gap designation by that the AICPA, that's for you non-accountants, the AICPA, the American Institute for Certified Public Accountants. That is the group that gave the federal board the gap designation. I think they were pressured because a lot of because as an accountant, we can't say something is done according to generally accepted accounting principles unless the AICPA has designated the board. So they had to designate FASAB, the federal board, as the gap setter. Otherwise, the big accounting firms would have lost, David probably knows the number better than I do, hundreds of millions of dollars of audit fees and consulting fees. So they had to give them, they're clearly not an independent board. In order to have the gap status, you have a Rule 203 that they're supposed to be independent. They're not an independent board. And then David, your comment is right on about, do we really want Congress to set these? But my experience when we lobbied, for lack of better terms, and educated and got all six public members on the board to agree that Social Security's accrued benefits should be a liability on the federal board. The only people who didn't agree were the three government people. Then they dragged the standard setting process along until three of the public members' terms ended. And then they went ahead and appointed two gentlemen to the board who used to represent the Office of Management and Budget on the board, but now they could be a public member because they no longer worked for the federal government. How do I hold them accountable? And maybe I could hold elected officials accountable for doing things, but I think there's less hope that I can hold this group accountable than I could hold Congress accountable.
David, you have your hand up. Did you want to add something?
Oh,
Actually, I didn't think I did have my hand up. But clearly I think, Sheila's raising an issue. I think there's a legitimate question about whether or not changes need to be made to the FASAB with regard to whether or not somebody is truly deemed to be independent. The way that it works right now is that you have three members that are appointed by the GAO, the Treasury, and the OMB, and then the Comptroller General of the United States, who's head of GAO, which I was. And by the way, I was the one that got designation for the FASAB to be a standard setting body. And there were a number of things that we had to do in order for the AICPA to be able to say yes to that. But the other six members are supposed to be appointed by the Comptroller General. I can assure you, to the best of my knowledge and belief, I took that very seriously, and we had truly independent people. And I think it's legitimate to say you don't want to recycle, people who formerly had the government role back in as a so-called independent role. I think that's an appearance of a conflict, if nothing else, and also inconsistent with the spirit of what the board's supposed to be. That's my view.
Judy, just one thing I forgot to mention, which is I think I mentioned that New Zealand has accrual budgeting and accrual financial reporting. I think that we have to, as a group, look at how much do we get involved in how the budget is calculated, because the budget is the largest decision-making process. And, should we, it also needs to be done on a better basis than it currently is.
let me suggest a couple of things here, if everybody can hear me. So New Zealand went to what I believe is a form of fiscal gap accounting. I think their accrual accounting does incorporate projected obligations. After I and others in New Zealand co-authored with people in New Zealand, a generational accounting for New Zealand, I came out with a method of generational accounting, fiscal gap accounting in 1989 with some other economists. Then we did studies in all the different countries, about 30 countries around the world, including New Zealand. I went to New Zealand. The co-author there was involved with the government, and they switched very quickly to a generational accounting and fiscal gap accounting. And the same thing happened in Norway. Went to Norway. They had a huge fiscal gap, even though they had a huge official surplus, running surpluses on their basis of their crazy accounting. But when you did it right, they had a big fiscal gap. It came out in the press. I got off the airplane to present the paper. I was taken to the hospital to present a bill to the latest newborn Norwegian, and the Prime Minister was being asked about it a half an hour later on the TV. So if we had a shadow, what I'm saying is publicity, publicity, publicity. If we had a shadow fiscal gap accounting or generational accounting group that would put out a statement for every major piece of legislation and for once a year about the overall picture to start, and then as it getting worse during the year, this might put on enough pressure, get enough press attention to start changing the climate. Because whether or not some accounting group does the right thing or not is not the issue. It's really whether there's enough heat put on Congress. And if they see this on 60 Minutes and on different outlets, they will start to move, I think.
Thank you for that. We just have about 4 more minutes. So I'd like to present a question from one of our listeners that says that, Truth in Accounting, Truth in Government, David Walker, the Peter Peterson Foundation, a lot of people have been trying to get Congress to change their ways for many, many years. And realistically, none of us have been quite successful at that. So what in this new effort can we do to press Congress to really change its ways? And I know you discussed something about that a minute ago with some of our, pressure campaigns, but any other ideas from our panelists of how we can really get Congress to pay attention?
Yeah, I'll tell you what we need to do. The only thing that's going to bind Congress to make tough choices with our spending and taxes and to put our finances in order is a constitutional amendment. That's the only thing that's going to do it. Fighting for it right now. Okay. Stay tuned. There may be an unprecedented suit by the states to sue the Congress for failure to call a convention of states to propose a fiscal responsibility amendment as far as 1979. That's what it's going to take to get them to be able to make tough choices, to make our finances sane and sustainable.
And David, make sure the Inform Act, if you look at that bill by Thune and Kane, is part of the amendment proposed.
Well, the reason I specifically say fiscal responsibility is that while we're focusing on trying to, make sure the debt to GDP is a reasonable, sustainable level, it allows you to be able to include other items on it that relate to fiscal issues, including, some of the things that we've been talking about and, potentially a presidential line item veto.
Good to know. Thank you for that. And we will share more information about that in our follow-up emails. Do any of the panelists have any, parting words of wisdom that you want to share or last things you want to give to our audience? All right. Joe, you are our representative from Truth in Government. Do you have something you would like to share with our attendees before we leave everybody to be citizen heroes in their own life? Go ahead.
Hey, Judy, before Joe takes over, let me just say one thing, less than a minute. I really want to thank you for all the work that you've done in putting this together with Joe Carvin and Bell O'Reilly. I think it's been a great team effort. I think it's been a wonderful start to get all these wonderful panelists, distinguished speakers with us today. And the good news is that if we can do this together, we can put that kind of pressure that Dr. Kotlikoff just talked about, or maybe the kind of amendment that Mr. Walker talks about. There is stuff that can be done, I would still hope. And I just really want to thank you, Judy, and Truth in Accounting, and Joe Carvin and Bill and everybody else. And again, greatest thanks to our panelists for sparing the time to be with us today. To all of you, thank you so much for everything you do.
Thank you, Don.
And Judy, we're going to have a pledge for people to sign. Is a petition for people to sign eventually.
That is correct. We were going to mention that in our closing. And it's
Judy, if I could have 30 seconds.
Absolutely, Joe.
Just want to thank the panelists profusely. And the only point I wanted to everybody to make this happen, and really what I want to, clearly was, today's day one. And each of the panelists and the participants is working in their own way. So David, anything we can do to help you, Sheila, Joe DioGuardi, Fatan. I mean, for me, this is the issue. You guys have been working on it for decades. So David, anything we can do to help you, we'll promote that. Sheila and Judy, Truth in Accounting, Joe and Fatan, Truth in Government, Dr. Kotlikoff, we want to help you as well. And I think the coordinating team's ready to continue to move forward, to coordinate behind the scenes and see if we can't build a massive movement to make the change that we all know is needed. Thank you so much, everybody.
Thanks a lot. Appreciate it. Take care.
Thank you, everybody. Be looking for an email with that petition that we'd all like you to sign for the government reform. That's our first step in pushing the reforms that are needed for our fiscal sanity going forward. Thank you all. Have a great day.